Welcome to Simply Trading. I'm Caleb, co-founder of Simply Trading. The other founder is Joshua, as other people in our Discord may know him as Sparky. Today we will be going over trading the RSI indicator. If you find any value in this video, please don't forget to like, comment, and subscribe. We also have a Discord link down in our description. Go ahead and check that out if you're interested in joining our group, where we have free alerts, we have analysis, and plenty of tools to help you get started. Without further ado, we'll go ahead and move on to what is RSI. RSI was developed by J. Wells Wilder in the late 70s. It is an acronym for Relative Strength Index, and it is a momentum oscillator. It is measured on a scale of 0 to 100, and within that scale, under 30 signals oversold and over 70 signals overbought. We'll get into a little bit more on what that actually means and how to actually take advantage of that indicator later on in the presentation. But down low, we have a picture of J. Wells Wilder, and then we have a picture of a basic SPY chart with a 10-period RSI set on it. It just kind of begins to show you what it looks like. The indicator is on the bottom for those of you who are new to indicators. To help you further understand what RSI is, we have a RSI calculation. So the RSI calculation is RSI equals 100 minus 100 over 1 plus RS. RS equals the average gain over the average loss. Now that may seem confusing at first, but all you really need to find is RS, plug it into that calculation, and then you know what your RSI number is. So in order to help you further understand that, I have an example on the bottom right where we will start to plug in some numbers. So RS equals 10 over 2. So 10 being the average gain within the period that we have chosen, and $2 being the average loss within the period we have chosen. So 10 over 2 equals 5. So you want to plug in the 5 to where the RS is within the equation. So RSI equals 100 minus 100 over 1 plus 5. 100 over 1 plus 5 equals 16.66. So then you take 100 minus 16.66, which gives us 83.33. So our RSI is 83.33. Now you can plug in different numbers for this, and you will get a range between 100 and 0, and it just gives you a better understanding on how RSI is actually calculated. And to simplify it just a little bit, RSI increases when average gains are greater than average losses. RSI decreases when average gains are lesser than average losses. Now that you have a better understanding on how RSI is calculated, we can go ahead and start moving more into how it is applied in trading. When looking at the RSI length, you want to select the RSI based on the chart time frame that you are looking at. So when you are looking at a longer time frame, generally I will use a longer RSI, and looking at a shorter time frame, I will use a shorter RSI. 14 RSI is often default for a lot of traders. They oftentimes will use this, and a lot of beginners will use the 14-period RSI. The 10 RSI is based on 10 periods, and that is generally applied to shorter time frames than something like the 14 RSI. But they can oftentimes be used fairly close. Now you can see where it is overbought at the 70 line like we have discussed prior, and that it is oversold at this 30 line that we have discussed prior in the presentation. Now when getting into an RSI entry strategy, there are many out there, but I'm going to go over a very basic one that you can generally apply to many trades. So an RSI can be used to identify long-term trends using 250-period RSI. When using a 250-period RSI, above 50 is an uptrend and below 50 is a downtrend. It's like that because it is pulling from such a large period that it doesn't have much movement. And when it moves above the 50, it generally begins to start on an uptrend. And when it moves below the 50, it starts to continue on a downtrend. Now, some brokerages and platforms don't allow you to use 250. I believe Webull only allows you to go up to 100, but it can still be useful around the same scale. But do not use 50 if you are using a 100 period RSI. When using a 10 period RSI, it is best to look for entry when RSI is below 30. Below that bullet, I have a 10 period RSI pulled up for the chart below that. And when you're using RSI, you want to not use that as your sole indicator, and you want to use it along with support, resistance, and reversal patterns. You want to go ahead and apply it with other indicators and other stuff that you are comfortable with. It is just one that I like to use when I trade and day trade. And here on the 10 period RSI, it is showing you where it is a little bit oversold. And on the same SPY chart below that, it is going to show another portion where it is oversold as well before it starts to ascend. So a 10 period RSI can be used on a long-term chart and even a short-term chart. Once you start to become more familiar with how to use RSI, it begins to get easier on how to understand it and what period and length to use when you are trading. Now, for an RSI exit strategy, when you are in a long position, when you buy at around the 30 mark, you want to exit when RSI is about above 60 if you are taking short trades and you are not trying to play risky. Because if you sell about 60, you will have more insurance that the stock will not go above the 70 RSI. You can go ahead and lock in profits at 60 if it begins to reject along the 70 RSI. Now, you can also use this when shorting a position. When you're shorting a position, you'll want to enter the RSI about 70 when you see it start to reject, and then you want to exit when RSI crosses about below 40 so that you have that insurance that it doesn't begin to reject before it reaches that 30 RSI. Now we can go ahead and move into a little bit on how this actually looks on a live chart. I would just like to go ahead and take a look at SPY. So applying the 10 RSI to SPY on this 5-minute chart, you can see that it is a little overbought up here, and it begins to oversell as it reaches this bottom right here, this lowest valley. As it reaches this lowest valley, if you were to purchase as you saw it continue to reject and move up right about here, you could have made a play from this 30 RSI at this 286 point all the way up to this 288 point, because that is about right where the signal is to buy just based on RSI. Now, you could have also played an options call, and you can also use RSI on the other side. So say you saw it up here, it looks fairly overbought, you charted it, and you thought that it was going to begin rejecting. You place a put, and you could have ridden that put from about this 288 mark all the way down to about this 285 mark, this 286 mark. So you can apply it with stocks, you can apply it with options. We can go ahead and apply the 14 RSI to the chart as well, and we will remove this 10 RSI. Because this is the default that a ton of people actually end up using. It doesn't move a whole lot differently. You can tell that it is overbought at this range and it is oversold at this range, about the same as the 10 period RSI. Now, if you happen to find any value in this RSI presentation, please don't forget to subscribe, like, and comment. The YouTube algorithm really likes this, and it really helps us out. These presentations take a ton of work, so it would be greatly appreciated. We also have a trading Discord that I mentioned earlier where we give out free alerts and tons of helpful stuff.